Assalamu alaikum students and a very warm welcome to all of you. This is your tutor for taxation exam, Mia Saad Mohammed. I welcome you all on behalf of ACCA. And as you know that this is a practice to pass webinar series for ACCA, and the prime objective of this series is the practice, as the ACC has designed these lectures for so that the students can benefit as much as possible for them. However, as you guys know, that one of the assumption of these webinars is that the students have practiced at least all of the syllabus once, or at least studied the syllabus at least once. So I'll start the webinar by a brief introduction of mine. Then we'll talk about the subject, and then we'll talk about the plan as to how I have planned this webinar or this 5-day session. So let's start. I have started with a funny quote which I always used to teach about taxation to laymen, that if you want to teach your friends about tax, eat 30% of their chocolate and tell them that this is the tax. So but obviously, as we are studying the taxation exam, we know we have to know much more than that. So I'll start with my profile. My name is Mia Saad Mohammed. I am a tutor at LGS Defense International Degree Program, who's a gold approved learning partner of ACCA. Apart from that, I am member of ACCA, and I run my own consultancy with the name of MSM Associates. So why I have thought that after qualifying ACCA I should teach taxation exam. After I have completed my articles from Ernst and Young, I was working in taxation department, and after qualifying my completing my articles from there, I started to work in a company in a tax department, and from there I started to develop interest in tax. And when I started my own consultancy, a few clients approached me from UK that whether I'll be able to do their tax returns. And I was happy. I then started working on UK clients as well. And from there, it developed my interest in UK taxation as well. So I deal in Pakistani taxation as well as UK taxation as well in my, consultancy. So that makes me a better person so that I can teach you that how the taxation exam is designed by ACC and what does ACC expect in that. My specialized areas are advanced taxation and advanced audit, and I teach taxation as well, along with the advanced taxation exam. And one of my student has achieved distinction in December 2017 exams in advanced taxation exam. Before starting these webinar, I want to tell you the significance of these webinar. I was honored that I have conducted this webinar series back in March 2019 as well, when it was offered for the second time, I guess. So I conducted this webinar series in 2019 as well, and that was my first chance to conduct a webinar for Practice to Pass series. And I myself was unsure that how much effective these webinars will be. But I was pretty surprised that after I've completed the webinar, the students appeared in paper. One of the students later approached me, and her name was Taspiha. She was attending the webinar from Saudi Arabia, and she approached me and said, "Sir, that your webinar were very useful, and I've achieved a distinction, nationwide distinction in taxation exams." So I asked her immediately that from where were you studying apart from the webinar? And she said that I was self-studying. I've taken some classes from one of the approved learning partner, but majority of the time I was studying myself. So the reason I told you this is that do not take these webinars non-seriously. Take them seriously. They can help you in a way that you'll be either, if you have the sufficient amount of knowledge, you'll be able to either score good marks, or if you do not have the sufficient knowledge, you may be able to pass the exam with the help of these webinars. Okay. Now, let's talk about the paper pattern. You guys are well aware of the paper pattern, that there are three sections in the paper: Section A, Section B, and Section C. Section A will consist of 15 MCQs. Each MCQ will be worth of 2 marks. And then there'll be a Section B. In that, there'll be three OTQs. Now, what are the OTQs? OTQs are basically sort of MCQs, but these MCQs relate to specific area that is given to you in the exam. For example, there'll be a paragraph, and then after that paragraph, there'll be five MCQs. That paragraph particularly be from one taxation chapter, and these five MCQs that are under that paragraph will relate to that paragraph. So, but in MCQs, you have like 2-3 lines, and then you'll have options, and those options belong directly to those lines. However, in OTQs, you'll have a paragraph, and then after that paragraph, you'll be having five MCQs for the answer of which you can find in the paragraph. Now, so there'll be three OTQs, three paragraphs, and each paragraph having five MCQs, so in total 15 MCQs. So each MCQ having 2 marks, so the section B will be constituted of 30 marks as well. Section A, section B, 30 marks. So objective paper out of 100 marks is of 60 marks. So 60% of the paper is of objective nature. So you should take it seriously. And students sometimes think that, oh, it's a 60% straightforward paper and there is no need to focus on section C. While we'll be doing the questions, I'll tell you that my approach is opposite, that you should seriously focus on section C, because if you have a chance to score good marks and if you have a chance to make mistakes that you have in section C, you do not have any chances of making mistakes in section A and B, because either it's the correct answer or it's not. However, in section C, I'll discuss this in detail further as well, that for each point or each transaction or each treatment you have done correctly, you'll score mark, and you'll only lose mark for the points that you have done wrongly, rather than losing the marks altogether like in MCQs. In section C, there are three questions, two question worth of 15 marks and one question worth of 10 mark. These questions will be subjective in nature, and as the exam is CBE, you have to solve these either on the word processor or the spreadsheet, mostly on spreadsheet, as it is a mathematical nature of exam. Now, what type of question you should expect in your objective? There are different type of multiple objective questions, multiple choice, in which you're given four choices and you have to select one. Then multiple choice and multiple correct answers. In four choices, there'll be multiple answers and you have to select that which bunch of answers is the correct one. Then there is a pull down list that you have to click and the list will open, and then you have to choose from one of the answers. There'll be, rather than simply four options in front of you, you have to click the list will open, and then you have to select the answer. Fill in the box. These are the MCQs that are bit tough. Why? Because you don't have any options. There is a blank box, and in that you have to write your answer. So you never know that whether your answer is correct or not. In MCQ or in multiple choice question, you have some sort of hint that you might have answered it correctly. Then there is a hot area. In hot area, there are images and you have to select or match images. Then there is enhanced matching. Enhanced matching means that there might be two answers there and two options there, and you might have to drag your mouse or click by matching that this relates to this and this relates to this. However, the most common type of question that will be tested is multiple choice. However, you should expect, I have seen several papers that in which the fill in box is quite common, which means a blank box will come. Pull down list is quite common. So you should expect that not all 30 MCQs will be multiple choice. There will be definitely some other type of questions in objective test question as well. However, in OTQ, majority of the times I've seen that the examiner does only test multiple choice correct answers. So guys, before moving on to the next slide, I can see that there are quite many participants that have joined. There are 69 participants. So I would like you to raise your hand so that I can assure that you can hear me correctly. Thank you. Thank you. I request other students as well to raise the hands as well, please. Okay. And you can see my screen as well. Okay, thank you guys. Now let's move on to the next slide. Now first discuss the paper format in detail, and let me tell you guys that I am emphasizing on the basics of the paper in our very first lecture today. I will not be repeating these things in the upcoming sessions that we'll run from Monday to from Tuesday to Friday. So I'll only be discussing these things today. However, as these lectures are recorded, if anyone missed this, they can always go to the ACCA website and look at the recorded lecture. Now, in section A, there will be 15 marks of MCQs that can be tested from any area of the syllabus. However, in section B, there'll be 3 OTQs. Now, as I told you, the OTQs are typically 3 paragraphs and each paragraph consisting 5 MCQs relating to that paragraph. What I have seen normally, the examiner test these 3 OTQs, one from the IHT, one from the CGT, and one from the VAT. So one OTQ from inheritance tax, one from capital gains tax, and one from value added tax. So if you want to study these chapters, do practice their OTQs. Why? Because almost in every attempt in the last 3-4 years, I've seen that one OTQ is from IHT, one is from CGT, and one is from VAT. And there is no point of repeating one subject in OTQs. For example, you might never see 2 OTQs from IHT. Why? Because he has already tested IHT in one OTQ. So there'll be 3 different chapters that will be tested in OTQs, and normally these are IHT, CGT, and VAT. Why these 3 chapters are normally tested in OTQs? The reason being is that the other 2 chapters that are income tax and VAT, he does test them in section C. The examiner has clearly mentioned that in section C, the 215 mark question will come from income tax and corporation tax. He has specified that. So one question number one question of 15 marks will come from income tax and one from corporation tax. So he has specifically mentioned that. And the third question, that is the 10 mark question, can come from any part of the syllabus. But normally I have seen is that income tax gets repeated in the question number 3 in a different way as compared to the question 1. If he has tested the question number 1 with income tax and he tests you again in question number 3 with income tax, the topics will be different. So the income tax gets repeated, and along with that, you can either see or expect to see IHT, CGT, or VAT. Or what you can see is that a question that typically or majority of the topics belongs from IHT and CGT on question number 3. However, VAT, I have seen that in section C does not gets tested that much, but it can be. So this is a breakup of the paper as to what you should expect in the paper. Now, as you have seen, the examiner has designed a paper in such a way that you are unable to leave any chapter while studying. Why? Because every chapter will get tested. For inheritance tax, you are sure short that there will be 10 marks of one IHT OTQ. For CGT, you know that 10 marks paper will come from that. For VAT, you know that at least 10 marks worth of paper will come. For income tax and corporation tax, you know that 30 marks worth of paper will come from these chapters. And in section A, he tests the MCQs from all over the syllabus. So you should expect that there'll be MCQs from income tax, from CGT, from IHT, from corporation tax, and VAT in section A. In section A, he'll try to test every possible topic. So that is why ACCA has changed in the last few years the way of the syllabus they test. Before that, it used to be a subjective based paper a long time in 2015, but after that the ACC have changed the way of the paper because this is the efficient way of testing the whole of the syllabus. And paper like taxation exam, in which you don't have like 15-20 chapters, you just have 5 chapters, 5 types of taxes. So in that, you should expect that the paper will get tested from all of the chapters. You are not allowed to leave any chapters. Now Let's discuss about the pass rates. As you're sitting in the fundamental level of the taxation exam, the pass rates are quite good for that paper. So it is not considered to be a paper for which the pass rates are poor or which the students fail very often as compared to the other papers. For example, if you look at F5, it has a very poor pass rates as well as F8. However, taxation exam is quite, good pass rates. Now, what are the common reasons of failure in taxation exam? One of the popular It is one of the popular choice of exam when you're opting for the exam. For example, as in ACCA, you're allowed to choose from any order. So students, I have seen that they opt for tax, being it a mathematical paper. However, what are the common reasons of failure? For every paper, the most common reason of failure in ACCA is poor exam technique. So whatever paper you are studying, you have to learn that what is the particular paper or exam technique for this paper. In this session, I'll be teaching you regarding the taxation exam. Poor understanding of the requirement is the most common reason of failure in ACCA. The students are unable to understand that what the examiner is asking. They are writing something, and the examiner is asking something different. Then answer lacking details. The examiner has asked for like three things and you have just answered one thing or a two thing, so you have not answered the requirements completely. So that I'll teach you. Poor time management. The problem is that student spends so much time on section C in in taxation exam that they are not left with ample amount of time to complete all of the question. Recently, in the last session, few of my students appeared in the exam, and when I asked them that what was the key reason of failure, or whether every time the student tell me that they have failed, the first question I've asked that have you completed the paper in full? And if they say no, I always tell them that you have already decreased your chances of passing the paper. Now, the second question I asked is how much paper have you attempted and why weren't you unable to complete the paper? And they normally say, sir, we are out of time, we have spent so much time in 15-mark question of income tax and corporation tax that we are unable to left with the question C. Then the next question I ask them is that have you practiced at home on computer the section C questions? And they're like, yes sir, but we haven't practiced that much. That's why uh, when I was sitting in the exam and we were sitting in the exam, we were unable to solve the question with that speed that is required. So guys, do remember that the most common one of the common reasons in failing the taxation exam is that you weren't practicing on computer based questions on computer, and that's why when you have to try it in the exam center for the very first time or second third time, you are not that practiced with those questions. So that's why I always suggest that do practice hard the section C question on computer. I mean, for the first few questions, it is fine to solve it on the paper and have an idea of the topic itself. However, after you have the idea, you have learned the income tax, start doing the questions on spreadsheet or the word processor. Develop your typing speed. Try to learn the formulas that makes your question easier, makes your answer easier. I'll be teaching you the techniques as well as we'll progress. However, with that, let's discuss that what will be my approach in this session. Guys, my approach will be that as this session is divided into 5 days, I will try to cover one text each day. However, at the end of the day, I'll try to cover one 10-mark question, so that in 10-mark question, normally what happen is that examiner try to test more than one taxes. There is a good article available on the ACCA website that suggests that you should read two articles. The one is the changes in the Finance Act, because the June 2021 will be the first exam for the Finance Act 20. So you should read that article, especially the repeaters who have appeared in the March 2021 exam and now are going to reappear in the June 21 exam. Do read that article because there are significant changes in the rates and rules and as well. And for those students who were unable to appear in due to some reason in March 2021 exam because of the COVID or anything, uh, they want to reappear in the June 2021 exam, do remember that this is the first attempt that is going to be tested with Finance Act 20. And if you want to appear in that attempt, you have to read the article first called Finance Act 2020 on the ACCA website. And the second thing is that there's an article called Bridging the Gap Between the Taxation Exam and Advanced Taxation Exam. Now, Advanced Taxation Exam is a tax planning paper. When you'll be studying, if any of you will opt for Advanced Taxation Exam, it is an optional exam, obviously, so you have the option to either opt it or not. But if you any of you opt for that, it is a tax planning exam, and in that no questions gets tested on a single type of taxation. For example, in taxation exam, the TX exam, the question will be set on the corporation tax and only corporation tax. The second question will be set on income tax and only income tax. However, in advanced taxation exam, there'll be no such question that that gets tested on one type of tax. It either gets tested on two or more than two. So the ACCA has felt that the student finds difficulty when they opt for advanced taxation exam. So what they're trying to do is trying to bridge the gap between the advanced taxation and taxation exam. And for that, what they have done is the 10-mark question in section C, they normally test it on more than one tax. Either it will be on income tax and CGT, income tax and IHT, CGT and IHT, or VAT can be tested with some other tax. But you will be clearly told that this is the part of CGT and this is the part of IHT, or this is the part of income tax and this is the VAT. And the requirements will not be that complex as well. So they're only trying to make you familiar that if more than one tax gets tested in the exam, how to deal it. So if any of you opt for advanced tax, you don't have to suffer that much. So that's why I will try to cover at least one 10-mark exam on all five lectures, in all five lectures, so that you'll have an idea that if the question gets tested on more than one tax, how that should be. Now, if before I move on, anybody has any questions, they can put in the chat box. However, let me tell you that in the handouts you have my F6 taxation notes that I normally use to teach my students. They have been updated with the Finance Act 2020 rules and allowances. Then I'll be solving the past exam paper questions, the list of which has already been shared with you. For that, apart from that, I will suggest you to use the Kaplan revision kit that should be for the Finance Act 2020. So do remember that whenever you buy the Kaplan kit, it should be for Finance Act 2020. So before I move on, if you guys have any question, I'll welcome those in the chat box. Anyone having any question can type your questions in the chat box. Okay, students. So I guess everything is well understood till now. Now, let me share my plan with you. That has already been shared with you guys as well. So guys, the first day we'll be discussing income tax and I'll be solving 4 questions. These will be the subjective type questions because the majority of the paper from income tax comes in subjective. Section C, a 115-mark question will always get tested in section C. So I'll try to solve 3 15-mark question and 1 10-mark question. Tomorrow we'll be discussing or studying capital gains tax. And in capital gains tax, as you guys know, that one OTQ gets tested for sure. So we'll be solving two OTQs, and in that I'll be teaching you my approach to solve the OTQs, which will make the OTQs easier for you. And then we can expect a 10-mark question from CGT as well. So we'll be solving three 10-mark questions. The third day we'll be focusing on the IHT. We'll be solving two IHT OTQs because one OTQ will comes from the IHT, and the 10-mark question can come from the IHT. So we'll be solving three 10-marks question. Then we have the fourth day on which I'll be focusing on VAT. Two OTQs on VAT day because one OTQ will comes from VAT in the exam, and three 10-mark question, from which two will be specifically focusing on VAT and one will be a generic question at in 10-mark question in which multiple text gets tested. And on the last day, I'll be focusing solely on corporation tax because there'll be 115-mark question from corporation tax. So on the last day, I'll be solving four corporation tax question with you guys. So we'll start with the income tax. Now, what will be my approach? I will assume that you have the amount of knowledge that we require to solve the question. However, before solving a question, what do is we'll go through my notes that have been already shared with you. We'll go through those notes. We'll study the topics that gets tested in that question, and then we'll come back and solve that question. While solving the question, I will be telling you some tips and tricks with the help of which you'll be able to easily solve the questions. So let's start with the first question. The first question that I want to solve with you is Dan. Now, if you look at my March 19 webinar, at that time, I have used the stylus to solve the question on screen, and I have also used the Excel, the spreadsheet as well to solve the question. However, this session or this year, I have decided not to use the stylus and I will use only the spreadsheet. Reason being is that I want to teach you guys by solving each and every question that how to use the spreadsheet effectively, because I have came to learn that the students have the idea, they know how to solve the question, but maybe due to the lack of practice of this questions on spreadsheet, when they were sitting in exam, they were unable to solve the question within the given time. And if I ask them that, did you have the knowledge when you have read the question? They said yes, but we were unable to solve the question in the given time. Our time management was not right. And there is no tip to correct that time management, but to practice the question in the exam conditions at home. You can, on a stopwatch on your mobile phone, and then start solving a question on the spreadsheet and see that how much time does it take normally for you to solve a typical question of a 15 mark or a 10 mark. So for day one, I have focused on income tax, and I'll start with the question Dan, and we'll read the requirements of the Dan. I'll teach you how to read the question, how to read the requirements, and then we'll study those topics which will be tested in that question, and then we'll solve that question. Again, guys, before I start solving the question, if anybody has any questions related to this webinar, how these will be conducted, what is my plan, and what are the other tips and techniques that I want to share, please pop it into chat box and write your question there. I'll try to answer in between. However, after solving every question, I'll stop for 5 minutes. I'll allow you guys to either note down or memorize it, or if you have any questions that you can write in the chat box, I'll answer that, and then after 5 minutes we'll move on to the next question. Okay, so any question you have, please put it in the chat box. I can see that the attendees have now increased to 92. That's good. I welcome the students that have joined us late. Okay, guys. So let's start with the question, Dan. Every time you have to solve a question, firstly, go on to the requirements, read the requirements so that you have an idea that from which question topic the question relates to and what are the subtopics that are tested in this. In this, the requirement is explain whether Dan was treated as a resident or not resident in the UK for each of the tax year 2018, 19 and 1920. So do remember guys that we have to tell the residency status of Dan, and in that we have to tell specifically about 2019 tax year, 1819 and 1920. So we don't have to talk about the 2021, which will be our tax year in the exam. We have to talk about the last two tax years regarding his status. Then the requirement B is calculate Dan's income tax liability for the tax year 2021. So obviously in that there will be several income tax topics that will be tested. However, this I clearly know gets tested from the topic called resident status of individuals and income tax. I have shared my notes with you guys with the help of which you will be able to revise that. So from my notes, I will open the topic called residence status of the individuals. It called overseas aspects of individuals. Now, what does a resident mean or a non-resident mean? Guys, do remember that here we are talking about the residency status of a person from a taxation point of view. We are not talking about the residency status from a law point of view. For example, from law point of view, any person who has a valid visa who is living in a UK or is a nationality holder or is a citizen of a UK is resident. However, for tax purpose, there is a chance that you might not have a citizenship or a passport, but you'll still be considered as a resident for the taxation purpose. So that's why do remember that the legal point of view of residency and the taxation point of view residency is different. And in taxation exam, you only should know the taxation aspect of the residency. Now there are automatic residency tests and there are non-automatic residency tests. Automatic test means that if you fall in any of those, you'll automatically be treated as a non-resident or automatically be treated as a resident. You do not have to do anything or do any calculation. Now, what are the automatic residency tests? If you stay in the UK for more than 183 days, that is more than almost 6 months, you'll automatically be considered as a resident, no questions asked. There should be no confusion. So we'll see that if the Dan has stayed 183 days or above in the UK, he'll automatically be treated as a resident. Then 30 days only, but if you have a home in UK. So if you have a house in UK and if you spend 30 days or more in UK, you'll automatically be considered as a resident. No questions asked. Then the most obvious is that if you live in the UK for a complete year and work there as well, so you'll be treated as a resident as well. So that is the most obvious test. Now let's talk about automatic non-residence that in which if any of which if you fall, you'll automatically be treated as a non-resident. The automatic non-residency tests are that if you spend as less as 15 days in the UK, you'll automatically be treated as a non-resident. For example, if I go to the UK for a 2-week holiday period and I'll come back, I'll not be treated as a non-resident, provided that I was never the resident in the previous 3 tax years. However, if I am resident in any of the previous tax year and in this particular tax year I spend more than 15 days, then we have to do some calculation about which I'll talk about later. So if Before checking the days for automatic non-residency test, always checks that whether you were resident in any of the previous 3 tax years. Now, the second is not more than 45 days and has not been resident for any of the previous 3 tax years. However, if I'm visiting the UK for the very first time, I have never been to the UK before, I have never been the resident in the UK before, this year I am able to spend more than 40, not more than 45 days. If I spend from 0 to 45 days and I've never been resident of the UK in the past, I will automatically be treated as non-resident. For example, in my example, I went there for 2 weeks and I was never been the resident. So in both test number one and test number two, I'm a non-resident. However, if I visit in 2021, I stay there for like 70 days and I become a resident, let's say, the next year if I want to visit the UK again, I have to spend more or less than 15 days. Because if I spend more than 15 days, I'll have to do some calculation to check what's my residency status. Last is, guys, that if you're working abroad, for example, there's a person who lives in London. He finds a job in Dubai. So he leaves London and now started to working in Dubai. Every often then he visit his home back in UK, for example, for spending Christmas holidays or a new holiday or anything like that. So if he spends less than 90 days in the UK and goes back to Dubai, he will not be treated as a resident because he was working abroad. So if the reason of your stay in UK is that you came to the UK temporarily and you're working somewhere else, you're allowed to spend 90 days in the tax year without being treated as a resident. Now, guys, you have seen that there's a gray area between 90 days and 183 days. What if I spend more than 90 days but less than 183 days? How will I be treated resident or non-resident? Because I have the extremes. I have the extremes, the low extreme and the high extreme, that if I spend 183 days or more, I'll be resident. If I spend 90 days or less, I may not be treated as a resident. What about the in between? What about if someone stays for 100 days, 110, 20, 30 days? What about that? For that, HMRC has made a ties test. What do I mean by ties test? Ties normally means roots. HMRC will look that the person who has stayed for more than 90 but less than 183 days, how many ties does he have with the UK? Depending upon his ties, HMRC will determine his residency status. Now, I have written the ties here. I always use mnemonic called FAW, FAW, for DC to remember the ties. Why? Because the ties will not be given you in the exam. You're well aware of that there's a section in the start of the paper in which all of the tax rates and allowances are given. The name of the ties will not be mentioned there. However, there'll be a table that we'll talk about later will be mentioned there. But I have to teach you how to use that table. The questions I have selected, I have carefully make sure that they should be on the topics with which students, find usually the difficulty to solve. And one of the topic that I have observed in the recent sessions that students are unable to understand is the residency status topic. That's why I selected this question so that I can teach you the residency status as well. We can solve a question. Now, guys, you have to remember the ties with the mnemonic called FAWDC, FAWDC. These are the routes that HMRC will be looking that whether one has or not from the UK or in the UK. The first is, has he any close family member in the UK? And what do I mean by close family member? HMRC has clearly mentioned that a close family member means spouse, civil partner, or a children. And that children needs to be minor children, not adult children. So Family means spouse, civil partner, or minor children. That's it. No uncle, aunt, friends, brother, sister, none of them will be constituted as a family. Okay? Only spouse, civil partner, and minor children. I'm telling you again, no sister, brother, aunt, uncle, parents, anyone. Okay? So do remember that. The second is HMRC will see that whether he owns a house in the UK or not. So that is the second tie. And that house must be available to him for the at least 91 consecutive days. What do I mean by available? For example, there's a chance that if a person has left London and went to Dubai for the job, he might rent out his house in the London because he thinks that, I'll not be coming back to London, or if I may, I'll stay in hotel or something. So he may let out his house. So if the house is not available to him for at least 91 days, that will not be treated as an accommodation. The third is work. HMRC will see that whether the person performs substantial work in the UK or not. Now, what do I mean by substantial? At least 40 days. If he's working less than 40 days, it will not be considered as substantial work. The fourth is days in UK. Days in UK means that before this tax year, in the last two tax year, has he spent 90 days in any of the last two tax year? We're not talking about this tax year and days in UK tie. We're talking about the last two tax years. Has he spent 90 days or more in the last two tax year in UK? And the fifth is country. That all the time he has spent all over the world during the tax year, did he spend most of the time in UK than any other country? For example, if I spend my time from April to April, that is our tax year, in five countries, and the majority of time I've spent is in Pakistan, so I will not be fulfilling the country tab. However, if the majority of the time I've spent in the UK as compared to the other four countries, I have lived in the UK for like 4 months, and in the other countries I have lived for 2 months each, so it means that I fulfill the country tab because I've spent more time in UK than any other country in the tax year. So these ties should be remembered with the mnemonic called 4DC. I've also explained these ties as well. Now, this is the ties table that will be given to you in the exam. My job is to teach you how to use that table and what are the ties, because ties will not be given, the table will be given. These ties will be used for the people again who are spending their days in the UK more than 90 but less than 183, or the better explanation is that they are not fulfilling any of the automatic residency test or automatic non-residency test. For example, if a person does not fulfill any of the not automatic non-residency test, it means he might be a resident, but he also does not fulfill the automatic residency test. Now, what to do with that individual? We have to check his status using the ties table that will be given to you in the exam. However, the ties will not be given to you. That are five ties, and that I have explained to you that you can remember using the mnemonic called 4DC. Now, as you remember that a person who has spent or who has been resident in the last three tax year is not allowed to spend more than 15 days in the UK. So if anybody has spent less than 16 days in the UK, either he's previously resident or non-resident, that does not matter. He'll be a non-resident. For example, I've given you my example that I visited the UK for 2 weeks and I wasn't the resident before, so I was treated as a non-resident. Even if I would have, that does not matter because I was not the resident in any of the previous tax year. Okay. Now, the second is 16 to 45 days span. Each time you have to check the table. First of all, you have to determine the number of days the person has spent in the UK. Then you have to check that whether he was a previously resident or not previously resident. So that you can select that which column or which specifically cell you have to check. For example, if the person has spent 60 days in the UK and he was previously resident, so my column will be 45 to 60 and previously resident. So he needs to satisfy 3 ties. How will I be able to know, sir, that how much ties does he satisfy? It will be mentioned in the question. You have to read the scenario and you have to check. Now, this is the table that will be given to you in the exam. I will teach you how to use this table. Step 1 is always check that whether a person satisfy any of the automatic test, that whether he'll be treated automatically resident or non-resident. Why? Because if he will fulfill any of the test, it will save a lot of hassle and time. Why? We do not have to do any calculation. We do not have to look at the ties table or anything. We can straight away tell that this person is a resident or not. One more thing I want to tell you, that the automatic test will not be mentioned in the question as well, will not be mentioned in the paper as well. So you have to learn these automatic tests as well. These ones, you have to learn them. The only table will be given in the exam, that is this table. Now, the second step is if they do not fill any of the automatic tests, it means we have to do the calculation for them. Then check their residency status of the previous year, so that you can determine that which row will be looking at. Then at the third number, check the number of days they have spent in the UK, so that we can check exactly which cell we have to look for. After that, we'll be able to determine how much ties he needs to satisfy. If he satisfy lesser ties than that, he'll not be treated as a resident. If more or equal to, he will be treated as a resident. So I hope you have a good idea of the residency status now. Now let's back to the Dan question, and we'll see that whether he satisfies any test or not. For that, we have to read the question. Up to and including the tax year 2017-18, Dan was always automatically treated as a non-resident in the UK. So he's telling me that up till 2017-18, Dan was always automatically treated as a non-resident. However, in the requirement, I remember he has asked me about 18-19 and the 19-20. So let's see what happened in those two tax years. Spending fewer than 46 days in each year. Dan knows that for tax 18-19, he will automatically be treated as a resident in the UK, but is unsure of his resident status for 18-19 and 19-20. Guys, this is a typo mistake. Here it needs to be mentioned 2021. So this is a typo mistake. It should have said there 2021. So in 2021, Dan knows that it will be automatically treated as a resident. He wants to inquire us about 18-19 and 19-20. Dan was neither automatically non-resident in the UK nor automatically resident in 18-19 and 19-20, which means that he is clearly telling us that we have to apply the ties test. For both of these tax year, Dan spent 100 days in the UK. So I know that how much days he has spent, with the remainder of each tax year spent on same overseas country from where he belongs. Throughout both tax years, Dan had a property in the UK, so one tie, home in the UK, and stayed there on the 100 days which he spent in the UK. So the house was available for 91 consecutive days, so it will be considered as a house. However, if the house was there, but the Dan has let out that property and was not living there, might not have been treated as a house. Dan also did substantive work in the UK during both tax years. So the examiner has himself told us that he has done the substantive work, which means that he must have worked for more than 40 days in the UK. He does not have any close family in the UK, so he does not satisfy the family tie. Now, what can I take out from these requirements? The first is that I know the amount of days Dan has spent. So if I look at the table, Let's get back to the table. So Dan has spent 100 days. So what I should be looking at is this column, this one, as he has spent 100 days in both of the tax years. There are two tax years, 1819 and 1920. Now, in 1819, if he spends 100 days in the UK and he's previously not resident, because it's clearly mentioned in the question that before these two tax years, he know that he was automatically non-resident. So it means in 1819, he was not resident in the previous tax year. So how much ties he needs to satisfy? If he is previously not resident, 3 ties. There you can see he needs to satisfy 3 ties or more in order to become resident. However, how much ties does he actually satisfies? Two. That is the work and home, which means that in 1819 he will not be treated as resident because he needed to satisfy 3 ties. However, in reality, he has satisfied 2 ties. So in the first year, that is 1819, he will not be treated as a resident. Now, let's get back to the question, and the next year that he has asked us about was 1920. In 1920, again, he was not previously resident. So how much ties he again needs to satisfy? 3, out of which 2 ties I know for sure that he has satisfied in that year as well. That is house and work. So, guys, can anybody tell me in the chat box, is there any other tie he satisfied in the next tax year due to which he becomes a resident, or will he be treated as a non-resident in the next year as well? Anyone, guys? Okay, guys, there'll be one more tie which he will satisfy next year, and that was the only trick in this question. And that tie is days in the UK tie. If you remember that for the days in the UK tie, you must not have spent more than 90 days in the UK in any of the previous two tax year. And he, Dan, has spent 100 days in the last tax year, which means that this year he satisfies days in the UK tie as well, with which he satisfied the 3 ties. And there were 3 ties that he needs to satisfy in order to become resident. So if I'll be writing the question, let me take you to the question and tell you how to write the answer for that. The question or this part is worth of 3 marks. Okay. So for the first year, that is 1819, if you look at the marking scheme, there was 1 mark allocated. All you have to write is that Dan needs to satisfy 2 ties in order to become resident in 2018-19. Sorry, 3 ties in order to become resident in 1819 and 1920. However, in 1819, he only satisfied 2 ties that are mentioned in the question, that is home, accommodation, and work. One bullet point. Always write answer in bullet points. Always. Then the second is in 1920, Dan again needs to satisfy 3 ties, from which 2 ties he has already satisfied, that is accommodation and work. However, in tax year 1920, he also satisfied days in the UK tab, a tie, which means that a person must have spent either 90 days or more in the last two tax year, and Dan has spent more than 90 days in the last tax year, that is 1819, and thus he satisfied 3 ties and will be treated as a resident. So that was the answer to part A. It took much of my time because I have to teach you the resident status as well. However, why I have taken much time to explain this, because it is a topic that normally not understood well by students, and I've seen that the examiner has been testing this topic excessively in the recent exams. There should be at least either a question or 1 to 2 MCQs on the residency status of your taxpayer in the paper. So that's why I've spent that this much of amount of time. So you'll be able to score at least 4 to 6 marks. Now let's talk about part A, in which we have to calculate the income. I will again confirm that what is expected from me to calculate. Dan's income tax liability has been asked to calculate. Now the requirement can be tested in 3 ways. You can either be asked to calculate the tax liability, which means you have to apply the tax percentages and calculate the amount of tax that needs to be paid to HMRC, number one. Number two, they can either ask you to calculate taxable income. Taxable income means that you have to calculate the total income and deduct the personal allowance from that, but you do not have to apply the tax rates. So do not waste your time by applying the tax rates and calculating the tax liability if this has not been asked. I have seen in the examiner reports that the examiner has clearly stated that the students have been seen to waste their precious time in the exam by calculating the tax liability when that was not asked. So do remember that only calculate the tax liability you have been asked to. Otherwise, if you have asked to calculate the taxable income, just deduct the personal allowance and leave it there. Stop the question. Okay. Here I have to calculate the tax liability, which means I have to apply the rates as well. And he said that when calculating the Dan's profit from self-employment income for the 8 month period. So do remember that he has not traded for the complete year. So I'll be alert for anything that needs to be time apportioned. Do remember that the accounts have been made for 8 months. So I'll be alert for anything that may needs to be time apportioned. Your competition should commence with a net profit figure of 7,200, indicating by the use of zero any items which do not require adjustment. That is another common mistakes I have seen in the exam, that student thinks that this is obvious that this not needs to be added back or deducted, so that's why they leave it, does not mention that. The examiner has clearly indicated you that you should have to use zero for the amounts that does not require an adjustment, and there is a mark for that. If you will not write that amount and will not show that, do not write that thing and will not show that with the zero, you will lose 1 mark or zero point 0.5 mark depending upon the marking scheme. So do remember that the amounts that does not need any adjustment are the free marks. All you have to do is just mention and write a zero in front of that. Now I'll try to create an environment that we have normally in the exam, that is, we have a question side by side along with the spreadsheet. So I will try to do that here. I will open question on one side and a spreadsheet on the second. So we'll read the question here and we'll solve the question here. We know that this question is done. We'll write the name of the question on top, done, and we'll write the requirement, that's it, that it's part B. You should bold it by clicking the B in the formula bar, so the examiner can clearly know that you have started answering the part B. Now I'll read the question, and with that we'll calculate the income of Dan. Dan's statement of profit and loss for the 8-month period ended 5th April 2021 is, this is his net profit, and always the examiner mentioned the notes, and by reading those notes we have to identify whether the expense is allowed or not allowed. If you download my notes that I have provided, and if you open the trading profit section, I have specifically made an heading called disallowed expenses. This is the heading called disallowed expenses, under which I have mentioned the summary of the expenses that are not allowed. So learn this by heart, because this gets tested in every second exam. The disallowed expenses. They can be tested into the income tax question as well as the corporation tax question. Why? Because the rules to calculate the profit for the employment and self-employment are almost identical, especially the disallowed expenses. They are almost identical for either the self-employed person or the capital analysis person. So this summary will help you a lot in solving section C question for corporation tax and income tax. Now, let's start reading the notes. During the 8-month period, 5th April 2021, Dan drove total of 12,000 miles, of which 4,000 were for private journeys. So I can straight away highlight, or you should remember that the miles that you travel for your private journeys are not a business expense and therefore disallowed. So motor expenses have been deducted in full. I have to add back only part that is disallowed. And the only part disallowed is the miles that he has traveled for himself. How will you calculate that? You will multiply the total amount of motor expenses by the amount that he has traveled for his private journeys and divide by total miles. For example, I'll start solving the question, but I know that it is a net profit question and I have to start with the amount given in the question. So I'll start with net profit here. I'll drag and increase the size of this width of this column. All of my number format can be with commas. 70,200 is my profit. Now I have to add back all the disallowed expenses. Now, the first expense is motor expenses. I can show the examiner by opening a bracket here as to how I have calculated this. The motor expenses are 3,300 from the question. And I can tell him that for 4,000 miles I have disallowed. Rather than calculating that myself, I can press an equals to, write the same equation 3,300. Static sign is used for the multiplication in spreadsheet, times 4,000 divided by 12,000. So the answer is 1100. 1100 expense is not allowed and the rest expense is allowed. Moving on. The figure for the professional fee consists of 340 for accountancy and 1460 for legal fees in connection with the grant of new 5-year lease for business premises. Guys, when you'll visit the summary that I have given in the notes, you can see that I have made a separate section for called legal and professional fees. I have written what are allowed and what are disallowed. Accountancy and audit fees are allowed. However, if you take a new lease for new and initial grant of lease, the fees is disallowed. However, if the lease gets renewed, renewal of lease is allowed. And it is clearly mentioned that here in the question, we are taking a new lease. So for new initial grant of lease, the fee is disallowed. So we'll add back lease fee, and the lease fee is 1460. Second, Dan runs his business using one of the 6 rooms in his private house as an office. The total running cost of house for the 8-month period ended 5th April 4200. No deduction has been made for the cost using the office in calculating of the net profit of 70,200. Now guys, before I move on to the adjustment number 4, I am pretty sure that apart from these two expenses that has note 2 and note 3, the rest are allowed or not allowed. The first is depreciation. So let's check my notes and see whether depreciation is allowed or not. You should remember that the first expense I have mentioned here is depreciation and amortization. All sorts of depreciation and amortization are disallowed completely. Never the depreciation is allowable in calculating the taxable profits. And the reason is that HMRC gives you their own style of depreciation called capital allowances. That's why they disallowed the accounting depreciation. So we'll add back depreciation as well. That is 2300. Other expenses are allowable, so we'll not do anything with the other expenses. And what we can do is we can now start focusing on the other adjustments. So we were talking about adjustment number 4, in which he has used rooms. Now whenever, this is a very common adjustment I have seen in the question, whenever one uses his office, his house as an office, only the cost that is allocated to the office can be deducted from the business. For example, if I have a house of 3 rooms and one room is dedicated for the office work, the total amount of expenses on my house should be divided by 3. One part should be allocated to my business and can be deducted as a business expense from there. However, 2 parts are not allowed. So here, if the cost would have been deducted from the 70,200, I have added back the 2/3. But it has clearly mentioned that this cost has not been deducted, which means I can only deduct the 1/3 that is allowed. So I will now less office cost. And how shall I calculate that? I shall take the total cost, that is 4200, and then slash sign is used for the division in Excel spreadsheet and divides it by 3. So it's 1400. Now, the only item of plant and machinery, oh, sorry, one mistake I have made. It was 6 rooms. I have mistakenly divided by 3 with my example rooms. 700 it is. Sorry. Now, the only item of plant and machinery owned by Dan is his motor car. This was purchased on 6 August 2020 for 14,800 and has CO2 emission rate of 110. Immediately I highlighted that this asset has been bought during the tax year. Do remember, whenever the asset is bought during the tax year, you first have to check that whether that asset qualify for any sort of capital allowance or not. Even if it does, you have to check that whether that capital allowance needs to be time apportioned or not. If you use my notes, I have made a separate chapter for capital allowances where you can see clearly about the capital allowances, that what are the types of capital allowances, and what particular capital allowances applies on particular assets. And for cars, I have made a separate section. This is a separate table that I have made for cars, that car qualifies for different capital allowances depending upon the CO2 emission they have. If the car has a CO2 emission of less than 50, it is the low emission car and will qualify for first year allowance. And the depreciation or the capital allowance will be 100%. If the car is between 51 and 110, it will be called standard emission car and it will qualify for written down allowance. We called it WDA at 18%. If the car emits more than 110 grams of the CO2 emission, it is called high emission car and it qualifies for WDA at 6%. Do remember, all of the capital allowances for car will be time apportioned if either the car has been purchased during the tax year or the car has some private use as well. Here, both treatments are being tested. Number one, I have already seen that he has drove 12,000 miles, out of which he has drove 4,000 for his personal use. So he must have used that car. So there is a private usage in that car. On top of that, the car has been purchased during the tax year. So two adjustment applies to the capital allowance treatment here. I will deduct capital allowance, and to calculate capital allowance, I'll show my workings separately in the below cell in the working, that the car is worth of 14,800 and the CO2 it emit is 110, which means as per my table, it qualifies for WDA 18%. It is a standard emission car. Now 14,800 times 18% times how many months have he used the car? From 6th of August 2020 till April 2021, that is till the end of this tax year, he has used the cars. That becomes 8 months, because for April, May, June and July, these 4 months he has not used, and from August onwards he has used the car. So that are 8 months. So I'll multiply it by 8 and divide it by 12. That will calculate only the time apportionment of the capital allowance. The private usage is still needs to be calculated. And how can we calculate the private use? Similarly, same way we have calculated the motor expenses, that whatever the answer will be of this equation, I will multiply it by further 4,000 times multiplied by 8,000 and divide by 12,000. Why I have multiplied this by 8,000 rather than 4,000? Because the only capital allowance that is allowed is on the portion that has been used for business purposes. That's why out of 12,000 miles, 4,000 miles were for private journeys. So obviously 8,000 miles would have been for the business journeys. So the capital allowance only qualifies for the business journeys bit. Now you have to solve this equation, and you can use the Excel formula to solve that equation as well. However, you should divide your formula into two parts. That is, first you should open a bracket, and in between you need to open a sub bracket, because there are two equations within the one formula. 14,800, I forgot to put an equals to. Every time you have to open a formula or write a formula, you first have to write equals to, otherwise the spreadsheet will not gonna recognize it as a formula, rather it will recognize it as a text. So 14,800 multiplied by 18%, again multiplied by 8 times divided by 12, and I will close the bracket. Then I will Again, multiply it by 8,000 and divide by 12,000. And then I will close the bracket. If this formula is bit harder for you, what you can do is you can calculate yourself in two parts. First solve this equation and then solve this equation separately, and then multiply the both figures, and you'll be able to calculate the answer yourself. Okay guys, there's some sort of error, so I will solve this manually for you. I will first solve 14 times 14,800 into 18% times 8 by 12. It's 1776. And then what you can do is you can multiply this into 8,000 and then divide by 12,000. Guys, anybody has any question till here? As it is a negative amount because I need to deduct it, I can put a minus in start of the formula if you want that your final answer should be presented in a negative figure because you are deducting this figure out of the total expenses. You can put a minus sign immediately after the equals to. What this will do is that will make the equation negative. You can see it here. I can do the same with the office cost as well. Immediately after the equals to, I can press or I can insert a negative sign. Now, as far as the self-employment is concerned, I am done with all the calculations. There is no point left. I have dealt with point 1, 2, 3, 4, and 5. So self-employment bit is done. But I have to calculate his total income. And in total income, you have to compute all sources of income for an individual. Does he have any other sources of income? I have to check the question. Yes, he has partnership loss and he has property income on top of that. So that's why we'll first have to calculate the profit here and then we'll move forward. Total profit. I hope that most of you are aware of the sum formula. If not, I'll be teaching you the sum formula. Sum formula does is that it will add all of the figures or subtract all of the figures that are above. So if I'll put sum formula, and to put the sum formula, you first have to press equals to sign. You have to write SUM sum, open the bracket, then click on the first cell, then move to the bottom right corner of the cell. You'll see a black arrow like that. Drag that till the last column and then press enter. What it will do is it will add all of the figures. And in my option or in my question, it is 73176. So that is the profit. Now, let's move on to the other bits. I have intentionally tried to solve this question as slow as I can so you can have the idea of every bit of the adjustment that I'm trying to do, because many of you might be unfamiliar with many of the things or the topics that I am teaching. However, as we progress, I'll increase the speed so that you may have the idea, and I want to teach the maximum topics in the session, so that's why I cannot spend that amount of time in every question. So let's talk about partnership loss now. Dan has joined the partnership. Whenever I see a partnership question, the first thing comes into my mind is that I have to check that whether I have joined the partnership during the tax year or at the start of the tax year. Because if I have joined the partnership during the tax year, I have to time a portion my share of profit. So let's see what happens in the partnership. On 6 September, Dan joined a partnership run by ENF for the year ended 5th April 2021. So the partnership's year end is April 2021 and I have joined it in 6th September. So if I'll count my months, so from September to October, that's first month. October, November, December, January, February, March, April. No, we'll count only till March. We're not gonna count April because we have to stop till 5th April. So how many months does it make, guys? Do remember that the best way to calculate the months is that always start from the date and stop till exact date. I have to start from the 6th of August and I have to stop at the 5th of April or the 6th of April exactly. If I start from 6th of August and stops exactly at 6th of April, that makes it 7 months. If I stop exactly at 6th March, that will make it 6 months. So I've seen many times the questions of the or the answers of the student as a marker that they have the idea that they need to time apportion it, but they have made a mistake that they have incorrectly calculated the months. So do remember the best idea is to start with the exact date that I know that on 6th of September, the first month will be completed. And from there on, I can count till 6th of April. So now I know that I have been a partner for 6 months. If the partnership had made a profit, I'll be entitled to the profit of my share out of the 6 month, sorry, 7 month. And if the loss, then I'll be entitled to a loss of 7 months. The partnership had made a trading loss of 12,600. So the partnership had made a loss. Until 5th September, profits and losses were shared 60% to E, 40% to F. But now, as I've been entered into the partnership, so the partnership ratio has been revised by 20% to D, that is us, and 50% to E and 30% to F. The first thing that you have to do is you have to first calculate the profit of the partnership that have been or the loss of the partnership that the partnership has made after you have joined the partnership. So you have joined the partnership on 6th of September. So what you have to do is you have to time apportion. How will you time apportion? The total profits or the total losses, in our example it is the loss 12,600, you will multiply it by 7 and divide it by 12, that is 7350. 7350 is the loss that the partnership has made after I have been entered into the partnership. Now the students may ask, sir, why we haven't taken from the start? The reason being that the loss that the partnership has made before my entrance belonged to two partners. I wasn't the part of partnership at that time, so that loss does not belong to me. The part of the loss that belongs to me should start from the date when I entered into the partnership, and that is 6th of September. So 7350 is the total loss that the partnership has made. Out of that, how much I am entitled to? Multiply by 20%. 1470 is the part of loss that I am entitled to. So now, how will you show it on the Excel sheet? You will write partnership loss and you can clearly tell your examiner how you have calculated it. That is 14,800 times 8 divided by 12, and you have taken 20% of that, and we have calculated that already. That is 1470, 1470. And as it is a loss, not a profit, so I will write a minus so that it can be treated as a negative figure. Now Dan will claim to relieve his share of partnership loss against his total income for the tax year 2021. So what do he mean by the total income? That I'll tell you later on. We'll be discussing the partnership losses. During the tax year 2021, Dan paid 875 gross to a personal loan to take out the purchase and share in partnership. Now, what is that? Guys, if you look at my notes, there is a section called qualifying loan interest. What is a qualifying loan interest? In income tax, the third topic I have given is the qualifying loans. And in qualifying loans, any loan that one buy for these purposes, the interest of that loan can be deducted from your total income. What is the total income? The income from all sources less any relief. So what are the qualifying loans? If the loan has been taken from the bank for these purposes, is interest is allowed to be deducted from your total income. Now, what will this do to us? It will decrease our taxable income and so will our tax. So what are the qualifying loans? If you have taken the loan to invest in the partnership as capital, it will be it will be a qualified loan. If you have taken to invest it in a closed company, it will be a qualified loan. Closed company is a company which has less than 5 shareholders, and if it has a more shareholders than 5, then all of them should be directors. Then it will be a closed company. To purchase the share of unquoted employee controlled company, then it can be treated as a qualifying loan. To purchase any equipment that is must for the performance of duties, you cannot perform your duties without that. If you have bought such equipment on loan, then it will be a qualifying loan. And if you have taken a loan to pay death liabilities of a deceased, then that loan can be a qualifying loan. The loan itself cannot be deducted, only the interest amount can be deducted from your income. So here in the question, we can see that the loan has been taken by Dan to invest in partnership. So that's why it will be a qualifying loan and its interest will be deducted from the total income. As I have not calculated the total income yet, I will not be able to deduct it. Even the partnership loss needs to be deducted from the total income, but I have calculated it for you beforehand, but we'll deduct it when we'll calculate the total income. Now, Dan has the property income as well, so we are only left with property income. On 6th April, Dan purchased a freehold house which was then let out, and the total amount of rent receivable during the tax year is 13150. Dan partly financed the property with the repayment mortgage, paying mortgage interest of 5000. Guys, all of you who are repeaters, I want to tell you that the mortgage interest was phased out by HMRC in 4 years, and every year 25% of the mortgage interest has been disallowed. So the first year 75% was allowed, 25% was disallowed, then 50 allowed, 50 disallowed. Last year 25% of the mortgage interest was allowed to deduct as an expense. But from this Finance Act that you are appearing in, that is Finance Act 2020, mortgage interest has been completely disallowed. So you are unable to deduct the mortgage interest. So do remember that whenever you see a mortgage interest, always remember that the examiner is trying to test that do you know that this change exists in this Finance Act, that the mortgage interest has been disallowed completely. Okay, and the last, the other expenditure on the property of the tax year 2021 amounted to 14810. So these are the expenses that we must have to deduct from the rental income, because the examiner has mentioned that all of these are allowable. So to compute the property income, all we do is we'll take the rent and we'll deduct it from the expenses. So 13150 less 1480. I have not put a minus sign because it is an income and I want to keep it positive. Now, coming back to the question, we have done with all the adjustments. So all we have to do is apply the percentages of the tax. However, one thing we have to do is that this partnership loss needs to be adjusted from the total income. So we first have to calculate the total income. Total income will be income from all sources, and there are only two sources, that is profit plus property income. From all other sources, he had made a loss. From that, we will deduct loan interest, as I've told you that it is an allowable 875, and this partnership loss we can deduct. Then we'll be able to calculate taxable income. No, sorry, net income. So I will again put some formula, SUM bracket open. I will select the cells and press enter key. Now, what is the difference between net income and taxable income? The difference between net income and taxable income is the personal allowance. And personal allowance is unchanged this tax year. It's still 12,500. I will put minus sign with that because I have to deduct it. And then I'll be able to compute my taxable income. I will simply click this plus this because plus minus equals to minus, so you'll automatically deduct that. That is my taxable income. Now all I have to do is to apply the rates. I know that the first 37,500 will be taxed at 20%. So equals to 37,500 times 20%. Now the remaining income will be taxed at 40%. That is 70,001 minus 37,500. All the remaining income will be taxed at the higher rate, that is 40%. So the income that is above is this minus 37,500 times 40%. That is 1,300. So the total tax liability will be this plus this. That is 20,500. Now, what HMRC has done with the repayment mortgage interest is that you will not be allowed to deduct that from your property income. However, when you'll compute your tax liability at the very last, what you can do is you can take the advantage of that on the basic rate band savings. That is, what you can do is you can take the repayment mortgage interest, multiply it by 20%, always 20%, and whatever the amount is, you can deduct it from your final tax liability. Now, why have HMRC done that? For example, in our question, the repayment mortgage interest was 5,000. So if I times it by 20%, that will be 1,000. Am I allowed to deduct it from that? Yes, but why HMRC has make it a deduction rather than making it allowable from the partnership income? Because HMRC will not be allowing anyone to deduct that expense and get the savings at a higher rate. Dan is a high rate band taxpayer. If Dan was allowed to reduce his income by any amount, he will be able to save tax at 40% because as income will reduce, so will his tax. HMRC will be giving relief on mortgage interest only at basic rate band. So that's why HMRC will not allow you to deduct it from your partnership or property income every time you have to calculate the savings on the repayment mortgage interest is that has to be after the calculation of your tax liability. A student can ask, sir, what if the taxable income has been only asked to compute and the tax liability has not been asked to calculate? Shall we only ignore the repayment mortgage then? Yes, because it will only be adjusted if you have been asked to calculate the repayment mortgage. It is not allowed to be deducted from the partner property income. Do remember that. So at last, I will add these two figures because one is positive and one is negative. So my final answer is 19,500. Now, with that, what I have done is I have tried to teach you residency status topics. I have tried to teach you the capital allowances on cars. I have then tried to teach you the disallowed expenses bit. I then tried to teach you the treatment of time apportionment when it comes to the partnership. Then the adjustments of repayment mortgage. I will now want to emphasize as we are studying capital allowances one thing, and then we'll take a 5-minute break, that do remember that this year, this is especially for the repeaters that are repeating the exam this time or have studied the March 2021 syllabus were unable to appear in the exam. This is especially for them, that there is a change in capital allowances. I'll share the page from my notes. SBA, Structures and Building Allowance, a new capital allowance that has been introduced by HMRC this Finance Act. And guys, let me tell you a tip. Whenever there is a change in the Finance Act, the first attempt of the Finance Act, there's a confirmed tip that the new rules that have been made or the changed in the Finance Act will get tested. Why? Because the examiner will be looking specifically that are the students aware of the changes, because many of the students that appear in the exams, many of them are the repeaters as well. So examiners are there to test that whether they know that the syllabus changes have been made or not. Are they aware of these changes? So do remember, they do learn by heart the changes that have been made in the Finance Act, because they will be gets tested. Now, sir, how will be I able to check the specific summary of the changes that have been made? I have already told you, go on the ACCA website, read the articles, changes in the Finance Act 2020. It is a very good article. It contains all of the changes. But only read that after you have covered all of the syllabus. Do not read that article before covering the syllabus. So the new allowance that has been announced by HMRC is SBA, Structures and Building Allowance. Which asset do qualify for that allowance? As the name suggests, buildings and structures. Which buildings and structures? Offices, retail and wholesale premises, factory and warehouse. The application of this is very straightforward. The structure and building allowance is allowance that works on the straight line basis principle of depreciation, which means all you have to do is you have to multiply the 3% at the cost of the asset. The detail of that allowance has been written below in the notes, that the SBA, that is the structure based allowance, is available on any qualifying asset. The criteria of the qualifying asset is mentioned above: wholesale, retail, factories, business or warehouses. What is the application? The 3% will be applied straight away. The 3% will be applied straight away on the cost of the building. Every year, this treatment will be done. There is no need to open a pool in the capital allowances column. Just multiply 3% and deduct it as an expense every year. It is as simple as that. I have selected a question as well in which it will be tested later on. I will tell you that. However, do remember that if any of the question that will be solving and the client has bought the building as an asset, do remember that the SBA allowance, that is the structure based allowance, will be applicable. So guys, I've tried to teach a question that I've tried to teach different topics, and in this way I have selected the other questions that focus on the other areas of the syllabus which we'll be studying. So till here, all of you for which the lecture till now or the session till now was helpful, can you please help me by raising your hand? Thanks a lot, students. I can see quite many hands raised. Thank you. Thank you. Now, we'll continue the similar approach. We'll solve a question. However, this time my pace will be a bit quicker as I have to cover the other topics as well. But before we move on to the new question, we'll take a 5 minutes break. And in that break, you're allowed to post questions in the chat box. Well, when we'll come back from the break, I'll answer all of the questions. Okay, students, students have asked about my contact number. It will be shared by the ACCA in the question box to your answers. Secondly, as far as the notes are concerned, they are available in the handout section for you to download. Sajid Ali, BPP key, you're not allowed to use BPP kit. I mean, I'll not prefer that you should use BPP kit. Rather, Kaplan kit is better for the mathematical exams, especially for tax. I'll recommend that you should use the Kaplan kit. Joel, you have asked about the loan interest. Do look at the qualifying interest section of my notes and you'll have an idea. Also, all of the questions that we'll be doing are part of Kaplan kit as well. So if any one of you is unable to understand, you have two options. Either go back and listen to the recorded lecture, or use the Kaplan kit to get a better idea of the answer. Ahmed Najab, we have not made a WhatsApp group, but we will. Muhammad Hasib Bulavaria, you have asked about the miles. How have I found out? That was pretty obvious, beta. The question states that there were 12,000 miles, out of which he has drove 4,000 for private journeys. So obviously the 8,000 that has been left must have been used for the business journeys. Sophia, you have asked that is do I recommend? Yes, I do recommend to watch webinar of even Finance Act 19. Why? Because if you have the idea of the concept, the rates you can apply, the updated rates you can apply of any Finance Act. Even if you have, some very good lectures of Finance Act 18 of some teacher, go and have an idea, watch that and have an idea of the topic itself. The rate does not matters. If you know how to calculate it, the amounts of the rates and allowances does not matter. You can see in the question. They are given in the question paper. Okay. So I've tried to answer majority of the questions. Okay, Sally Pepper has asked about statutory mileage allowance. Sta- Do remember, guys, that statutory mileage allowance will always be used only and only if you have used your own car as an employee and you have used that car to meet clients or to do any work that is necessary or that we can call it as for business journeys. For a self-employed person, statutory mileage allowance does not, gets tested, or it is not a topic for a self-employed person. It is a topic of an employed person that he is using his private car. His employee is not, reimbursing him the money. Only then will use the statutory mileage allowance. Here, Sally is a self-employed. He's not an employee, so statutory mileage allowance will not be used. Baris Ali, I am unable to find your question. If you can post it again, I'll try to answer it. Okay, you have asked about the capital allowance of the CO2 emission car. Yes, if the car is less than 50 grams CO2 emission, then it's a low emission car and it will be qualified for first year allowance. 100% depreciation will be available in the first year. Okay, now guys, let's move on to the second question. I'll share my screen with you. So as far as the notes are concerned, you can download it. Now, Again, after the end of this question, I will stop for the questions, and the last 15 minutes are dedicated for your question answers. So don't worry, the last 15 minutes I'll be only answering your question. And if some were left, I'll try to answer them on WhatsApp. Okay, guys. Now, the questions that we'll be doing today, we have done the done. Now, the next question I want to do with you guys is Ashura. It's a September 16 attempt question. And with that, I want to tell you one thing, that I don't know how many of you know that there are ACCA practice tests available on ACCA's website. Not only they are available, they have been upgraded to Finance Act 2020. So you have the exact live environment that you'll be going to sit in the exam. You can log into ACCA website, attempt those practice tests. They are in complete paper format. They have MCQs, they have OTQs, and they have section C question, and you have the answer to them as well. The section A and B will be automatically marked by the computer if you attempt those practice tests. However, the section C, you have to solve it and you have to self-mark. However, the answer of them are available on the website. I'll show you how you can assess those, and then we can discuss that why am I using those practice platforms. So let me show you guys from where to open that. If you go onto the ACCA website and go to the study support resources, then select ACCA qualification, and from there select your exam, that is taxation exam. If you go into the taxation exam, scroll down and there will be a learning and revision menu in which the second item is question practice UK ACCA practice platform. You have to click on that. It will take you to a page. Scroll down that page and then you'll have a link called login to practice platform. Click on that. You'll be routed to a screen, and here you have to enter your ACCA username and password. I have entered mine already. So you click into sign into my ACCA and then a page will open like this. What you have to do is you have to select the paper for which you want to attempt the question. It has questions available for all of the papers. The best thing about this is that the taxation question available for that has been upgraded to Finance Act 2020. So I always tell my students that ACC is the most forward-looking qualifications. They work closely on their resources. I have selected UK, the taxation first, then the variant that is UK. Then there is only one option called ACC official resources. If you click on that, you'll have two options: specimens, past exams. There's a specimen paper as well that has been upgraded to Finance Act 2020. You can attempt that paper as well. And there are three past exam papers or three tests. Complete the September December 2020 paper is available and upgraded to Finance Act 2020. There is a practice test 1 and there's a practice test 2. There are two practice tests. These are very good and very helpful. I'll recommend each and every one to attempt them before the exam. This will give you an idea and this will help you not to panic in the exam, because one of the problem is that the student does their practice on paper and pen, and when they have to solve the question on the computer for the first time, they lack and they're unable to manage their time as well. Now, as I told you that I have already assigned these papers to myself, all of the papers and specimen exams. So you can clearly see I can start any one, practice test 1, practice test 2, or the December 2020 paper. It has already been upgraded to 2021 syllabus as well. So I have mentioned in the list that I have shared with you that Ashura is a question that we have available on practice test 1. Apart from that, it is a September 16 question. It is also available in the Kaplan's kit as well. So you can access that question if you want to offline from Kaplan's Kit, or you can download it from the ACC's website. But the reason I don't recommend to download the past papers from ACCA website for taxation exam only is because they are not upgraded to the latest finance sector rates and allowances. So the upgraded questions can only be found from the Kaplan Kit or the practice test. So let's get back to the practice test, and I'll show you how does that work. This is exactly like the paper you'll be having on your exam screen when you'll be opting for the paper. From the navigator, you can directly go to the question which you want to attempt. As I know that the first 30 questions are MCQs and OTQs, I will directly go to the question 31, that is the section C question. The first question, Joey will be doing that today as well, but currently I want to do the question Ashura with you. Every time you want to scroll, there'll be a pop-up and telling you that you have to first scroll down all of the tabs. You remember that I was sharing my question done and my spreadsheet half and half with you guys, and the reason was just to give you an idea, as in the real exam the half side of the screen shows the question and the half side of the screen shows the spreadsheet. So that I was trying to do. If there are questions that are not available in the practice test and you want to test them in screen by screen, so what you can do is you can take a picture of that question, put that picture into your computer. On the half of the screen, open that picture. On the half of the screen, open the spreadsheet and start solving those questions. This activity will help you a lot. Okay, now as we are not doing Joey question now, rather we are doing the Ashura question. So that is the Ashura question. Let's start with the requirement. Before I move, I'll be giving only 2 minutes to quickly answer your questions till now, and then I will move on. So the questions till now are, okay guys, so no new questions, so I can move on to the question quickly. Always read the requirement, please. State two advantages of Ashura of choosing 5 April as an accounting date rather than a date early in the tax year, such as 30th April. Now, what we normally think is early in the tax year means March or February. Do remember that the tax year starts from 5th April. It is not a calendar year. So earlier in the tax year means that as close to 5th April. So for tax year, the earlier date can be 30th April because 30th April comes immediately after 25 days of starting the tax year. The tax year starts on 5th April. So the earlier in the tax year means the earlier the date to 35th April is. So 30th April is quite close to 5th April because it is immediately after the 25 days. What he's asking me is asking me that what are the advantages. One advantage that I clearly know is that there's a topic called basis period. There's a topic called basis period. And in basis period, what we normally study is you can easily find that topic from my notes, and there are several examples of basis period as well. I'll quickly show you basis period. You can, it is a very helpful chart that I have made here, and with the help of that you can easily not only learn basis period and solve its questions as well. However, coming back to my question, that two advantages. What basis period topic is? Basis period topic is that the tax year runs from 6th April to 5th April. What if that I am preparing my accounts from 1st January to 31st December? Now my period does not match with HMRC's period. What basis period does is that it use some formula and aligns your period with HMRC's tax year, that is 6th April to 5th April. But it's asking me that if I choose the exact dates for my year end, The one as for the tax year, that is my year end can also be 6th April to 5th April, and the tax year can also be 6th April to 5th April. What are the advantages? What can be the advantages? The first very obvious advantage is that I don't have to apply the basis period. And all of you who have studied basis period know that it is quite a tricky topic. Student does not like to study basis period or do their question because it gets quite confusing sometimes. So the easiest thing or the best advantage of having the same year end as the tax year is that application of basis period is straightforward. So if I'll be you, I'll click on this because I told you that you have to write an answer in the bullet points. I'll write application of basis period is straightforward. That's it. Second, all of you who knows that the basis period is a topic knows about overlap profits. You know that whenever my period and the HMRC period is not the same, what normally happens is there are overlapping profits. So if my period and HMRC period is same, there will be no overlapping profits. Simple as that. And you have taken 2 marks. Now, let's move on to the second part. For that, you have to scroll the question all the way down before clicking next. On the next page, you can see the other requirements. Before I read, I'll be needing 2 minutes so that I can plug my charger in. Okay guys, so we're back on track. Let's read the remaining requirements. Calculate Ashura's revised tax adjusted trading loss. The reason why I have selected this question, the students are quite good in calculating the profits, but when it comes to losses, for some odd reason, students are not good in losses. So that's why I've intentionally selected the question so I can revise the losses with you. Then explain why it would not be beneficial for Ashura to claim loss relief under the provisions giving relief to loss incurred to the earlier years of trade. Now, what is that? We'll study in a bit. And then D, assuming Ashura claims for loss relief against her total income for the tax year 2021, calculate her taxable income this year. So now we are quite obvious or sure now that this question is all about losses, losses, and losses. So let's quickly have an overview of losses first, and then we'll study. In my notes, you can find a trading loss relief section. In that, I have clearly mentioned that there are 4 types of losses that one can claim as a self-employed. One is carry forward against future trading profits. If you have a loss this year, what you can do is that wait for the next year that you have the profits, and then against that you can adjust your losses. The second is set up against total income. That can only be used by the person who has or who must have other sources of income against which he can use the total income. For example, if I am employed somewhere as well, I am getting a salary from there. On top of that, I have a property that I have let out and I receive rent from there. And apart from these two, I am doing a business as well. So I have three types of income. If in my business I receive a loss, but I have a property income and I am receiving a salary, what I can do is I can compute my, or I can take my or set off my loss against my other two sources of income. What that will do is that will decrease my income for the tax year, and I will not be I will not have to pay the amount of tax that I would have supposed to pay otherwise. So it will decrease my taxable income, will decrease my tax. Now, then there is a loss called opening or earlier tax years relief. Do remember that this relief is only available if you have faced loss in the first 4 tax years of the business. So that is only available to new businesses that are facing loss in the early 4 tax years. So it means that is it is a situational relief. Only if the client is new in business, only then this relief is available. However, carry forward against future trading profit is not a situational relief. It will always be available. Set off against total income will always be available as long as you have other source of income. If not, then this relief is not for you. And the final relief is terminal loss relief. Terminal, the name suggests that if the business gets terminated, if you have seized the business, then you can really claim this relief. So that relief is obviously situational as well. It will only be available to the business that have closed the business or seized the business. So first of all, whenever there is a question, first narrow down the amount of reliefs that the person can take. For example, if he is not a new in business, he cannot take earlier or opening year loss relief. If he's not closing down the business, he can also not take terminal loss relief. It means we are only left with two options: carry forward and set off against total income. So these are the only these two options that we can use. So this is the way that whenever you read a loss question, first narrow down your choices, that what are the types of reliefs that are available. Now we'll read the Shura question and we'll see that what types of losses are available to him. However, let me quickly discuss the opening year loss relief with you. That in opening year, as I told you, that the losses are available if the losses are received in the first 4 years. How you can relieve them? You can, under this option, you can set off them against your total income. Again, total income is income from all sources. On FIFO basis, first year, first out, or that I usually say oldest one the first. So you have to start with the oldest year. Now, sometimes students ask me, sir, that you have said that if the person has started the business newly and in the first 2, 3 tax years, yes, face the loss, he can carry back previous 3 tax years. But sir, how can he? He has just started the business. He does not have any business 2, 3 years back. Against what will he, set off against? And I usually say that if he has some sort of an income before starting the business, against that he can set off the loss. And they then ask, sir, but what is the point of carrying back? Because those tax years have gone, we have submitted the tax returns, we have paid the taxes on that. So what is the benefit of carrying back the losses now? Guys, HMRC has given you this option that you can always carry back your loss if you fulfill certain conditions. That is, in our case, if you're in the first 4 tax years, you face the loss, you can carry back, and HMRC will refund you the tax that you have already paid. So now if I narrow down, it is usually for the people who are doing the job and they then they then decide, okay, let's switch the job, or then just leave the job and start our business. So they might have employment income in the earlier years, or they might still be doing jobs and started a part-time business. So it is available for the people who must have other sorts of income. So because it is set off against the total income. The difference between total income and the profits is the profit is only from your business, The total income is from all sources. If a loss says that you can only adjust it against your profit, it means you should adjust it only against the income from the business, because profit means business profits. If it says that you can adjust it against the total income, it means you can adjust it against all sources of income: property income, employment income, other pensions, any other income. Okay. So now let's get back to the question and see that what are the options that are available to Ashura. Guys, before I start the question, because it is quite a complex question, if all of you that are good to proceed with me and till with me here can raise your hands quickly, so I know that all of you are ready. Okay, thank you guys. So let's start. As we have done the requirement A, we'll directly start with requirement B, that is calculate the tax adjusted trading loss. Now when we are calculating the tax adjusted trading profit, whenever we add back a disallowed expense, it increases our profit and resultantly increases our expense. But when we are calculating a tax adjusted trading loss, every time we'll add back a disallowed expense, it will benefit us. Why? Because it will increase our loss. The more the losses, the more we can set off against them or against our other income and save our taxes. So do remember that in losses it works the other way around. The expenses helps you rather than damaging you. Okay, Shura has been self-employed by Rift PLC since 1st January 2008. She has also been self-employed since 1st July 2020. So you can see that Ashura is doing a job as well as she has started a business. So that's what I was right, that it is normally for the people that are doing business along with something else, the opening and early loss relief. And we can see that the Ashura has started the question in our question, the business in our text here. You can highlight the important things using this feature. Select the text, click on the highlight, and it will highlight. So she has also been self-employed since 1st July 2020. It means that she's new into the business. It means she can claim earlier year loss relief. If she would not have been new in the business, if it would have been more than 4 years since she is in self-employment, she would not been able to take the earlier year loss relief. Now, preparing her first account for the 9-month period ended 5th April 2021, the following information is available for the 2021. Now we have our employment. This will we will use when we have to calculate her total income and we need to set off the losses, because for total income we first have to calculate her total income. Once we'll have her total income, then we can set off our losses against that. So employment will only be used for the total income purposes. During the tax year, Shura was paid a gross salary of 56,600. That's good. On January, Shura personally paid two subscriptions. The first was a professional subscription, 320 to HMRC, approved professional body. The second was a subscription of 680 to Health Club, which Ashura regularly uses to meet Rift PLC clients. Now, for that, you must consult the notes section of employment income. If you open my notes and if you navigate to employment income, there in the very start, I have clearly mentioned. Now, these are very summarized notes, and the reason I have summarized them is that you can see that we have a very thick Kaplan book, and it is pretty tough for students to read that Kaplan book. So I've made these precise notes so that they can help you. I've mentioned that what are the allowable deductions. So it is clearly written that the allowable deductions are subscription paid to approved professional bodies. If any subscriptions are paid apart from professional bodies, they are not allowed to be deducted from your employment income. So if I get back to the question, there are two subscriptions The one is to the professional body, that is this one. So I'll highlight that. This is approved one. We can deduct it while calculating our employment income. However, the second was 680 to a health club, which is not a professional body. So the subscription to it will not be allowable. So we'll ignore that. However, guys, do remember, please, that the transactions or the treatments that we have to ignore, we have to clearly mention the examiner. You will write the second subscription or the health club subscription and write as zero. Why? Because examiner needs to know that did you know the treatment and you did not deducted it, or were you altogether didn't knew that? So you have to tell him that I knew that this does not gets deducted, and I have mentioned with the use of zero. So always the items that does not gets mentioned or that are not allowed, please write them with the help of zero, even if the examiner has not mentioned. Okay, now Ashura was not reimbursed for the cost either of these subscriptions. So the first is allowed, the second is disallowed. During the tax year, Ashura used her private motor car for business purposes. She drove 3,400 miles in the performance of her duties for Rift PLC, which the company paid her allowance on 55 pence per mile. I remember a student, her name starts from S. I can't remember the name clearly. I was looking at the question. You asked me about the statutory mileage allowance. Here you can see that she is an employee, she is using her private car, and she is using that car for business journeys. Now we can calculate the statutory mileage allowance. If you check my notes, it has a separate section for statutory mileage allowance. It tells you that what mileage considered to be business with the help of this chart, and it also tells you the rate of HMRC. HMRC's rates will be mentioned in the paper as well. It is 45 pence per mile for the 10,000 miles, and the miles that are above 10,000 it is 25 pence. Up till that point, if you have driven your car and your employers reimbursed you, no treatment. So guys, remember there are three scenarios. I have used my car and my employer did not pay me a penny. So what I can do is I can deduct that as an allowable deduction, all of the miles that I traveled. I should multiply the number of miles multiply by 45 pence mile, I can deduct it from my employment income. Second scenario, I have used my car, traveled for business journeys, and my employer reimbursed me exactly the rate that HMRC says, that is 45 pence. No treatment will be made. There will be no deduction, and there will be no addition into my employment income. Why? I have made an expense, my employer reimbursed me with the exact rate that HMRC says, no treatment. Now the third scenario is I've used my car, my employer does reimburse me, but he reimbursed me at a higher rate than HMRC, which is happening in the Ashura's question. In that case, only the amount that is above 45 pence will be added as a benefit into your income. So we can see that Ashura is being paid for 55 pence per mile, and the if we multiply 10 pence per mile, because the above differential amount is 10 pence above. So if we multiply by 10 times 3,400, the additional amount he got was 34,000 pence. So if you divide it by 100, you will convert it into pounds. It is 340 pounds. What I normally do is I multiply it by zero point 0.1, so the answer will directly comes into pounds. If I multiply zero point 0.1, that is 10 pence, with 3,400, you'll straight away get the answer, that is 340, rather than dividing it again by 100. I always prefer to do calculation in pounds. So 340 will be added back. So I should remember that. I can highlight that. I can open a scratch pad and write there that till now less subscription worth of 320. That are my notes. Add statutory mileage allowance SMA 340. So Scratchpad is always there for you for your rough workings. So it will be saved even if you cross it. Now, you can use the calculator here as well. You have the calculator here as well. You can drag the calculator above. You do not have to click here. You can use the calculator by using the keys on your keyboard as well. Now I am using the keys of my keyboard. So you can use the calculator here as well. Now, fourth point, during the tax year, Shura contributed 2,800 into RIFT's HMRC's registered occupational pension scheme and 3,400 gross into personal pension scheme. Now guys, if you open my notes, there is a separate section for pensions. There it is, separate section for pensions. I have clearly segregated that there are two types of pensions, occupational and personal. Remember guys, occupational pension can only be paid by a person who is employed somewhere. A self-employed person does not have any boss, does not have any company, so he cannot pay or contribute in occupational pension scheme, because occupational pension scheme is normally a scheme that your company opens or operates. If you do not have any company, you're self-employed, you cannot contribute an occupational pension. Now, you can only contribute an occupational pension if you're an employee. Ashura is an employee, she's contributing. Now, what is the treatment of occupational pension scheme? If you are contributing yourself, you can deduct it as an allowable deduction from your employment income. If your employer is contributing into your occupational pension scheme, it is an exempt benefit. Exempt benefit means you have to mention that it is an exempt benefit and you will not be doing any treatment of that apart from that. Now, there is a second pension called personal pension scheme. Personal pension scheme means that you are not contributing in pension fund of your company. You went into the market. There is a private pension fund with which you have an arrangement that you will contribute in that. Now, pension fund can be your company's fund or it can be a private fund. However, both have the same treatment. Whenever you'll retire, they'll pay you out of that fund. The government promotes that you should contribute into the pension, so there are different benefits on different types. If you contribute an occupational pension, you can deduct it from your salary, thus reducing your salary, thus reducing your tax liability. If you're contributing in personal pension scheme, what it does is it increases your basic rate band and high rate band by the gross amount. So what do I mean by gross amount? HMRC says that if you want to contribute in personal pension scheme, contribute 80 rupees, we'll contribute the 20 rupees on your behalf or 20 pounds on your behalf. But you can avail the benefit of 100 pounds. It means every time I want to contribute, I just have to contribute the 80% of my desired amount. How will I be able to know, sir, that whether the amount mentioned in the question is gross or not? Unless or until it is mentioned that the amount is gross in the question, only then you'll assume it is a gross. If the question is silent, you'll assume that it is net. You have to gross it up. If the question mentions it as a net amount, obviously it is a net amount. So how will you gross it up? Whatever the net amount is, multiply it by 100 divided by 80. So 100 over 80 is the formula to gross up. Now coming back to the question, during the tax year, Rift PL's Shura contributed 2,800 into her occupational pension scheme and 3,400 gross into personal pension scheme. So now what I'll do is I'll highlight both of these figures, so I remember that I have to do something regarding them. And what I'll do is I'll go onto my scratch pad and I'll write less pension, that is the occupational one, and the amount of it is 2,800. So I'll write 2,800 here. Then I'll write a note for myself. Remember to extend band with pension of 3,400. So these are my notes till I am reading the question. Self-employment. Now from here we can start discussing that what was the nature of the self-employment of Ashura and how she made and how much she made a loss. Ashura had taxation loss on her draft accounts for the 9-month period ended 5th April 2021, 3,300. Okay, so this is her loss. This figure is before making any adjustments. So all of the adjustments below will be making them. Advertising expenditure of 800 incurred during the January 2020. The expenditure has not yet been deducted in calculating the loss. So guys, expenditure is an allowed expense. Advertising expenditure is an allowed expense. So we will add this expense into the loss. Please do remember that by adding an expense in the loss will increase. However, by adding in the expense in the profit increases as well. But please do remember that don't confuse that here we have a loss. Okay, so in my scratch pad, I'll write add 800 to loss. Now we have capital allowances in point 3. The cost of Ashura's office, for that we have to see point 2. So let's read point 2 and 3. Ashura runs her business using one of the 5 rooms in her private house as an office. Again, similar adjustment. She's using her house as an office and it has 5 rooms. So what I'll do is I'll see how much rooms does she uses for the office purposes, multiply that, divide by 5. The total running cost of her house for the 9-month period is 4350. So I know that one room is used for the office. So what I'll do is I'll write add office cost. And how will I add office cost? 4350 times 1 divided by 5. Whatever my answer is, I'll add it. Or I can immediately calculate and write it as well. 4350 divided by 5. It's 870. So I can write 870 for myself. On 10th June, Ashura purchased a laptop computer for 2600. We know that all of the plant and machinery qualifies for AIA. The limit of AIA is 1 million. So we can tell 1 million, all of the plant machinery can qualify for AIA. So I can write that capital allowance I have to less. Now, guys, from profit, we deduct the capital allowances and the capital allowances decreases our profit. It will be opposite with the losses. The capital allowances will be added into the losses and they will increase the losses. So rather than less, I will write add here. These are the common misconceptions as well for which I have chosen this question as well. 2600 as a capital allowance. Now, again, on 1st July, Ashura purchased a motor car. So do remember, I told you before as well, she has purchased the car during the tax year. Please be careful when someone purchase the asset. If they have purchased during the year, we have to time portion it. Ashura purchased a motor car of for 25,600. So this is the cost. We have to see the CO2 emission of the car to check for which type of capital allowances it does qualify. The motor car has CO2 emission of 117 grams per kilometer. That is above 110. It is a high emitting cars. So it qualifies for WDA, but at the lowest rate, that is 6%. It qualifies for WDA 6%. And that too will be time apportioned with the number of months for which he has used the cars. Okay. During the 9-month period for the 5th April year ended 2021, so I know that the months are 9 because he has told me the question. 9-month period. Ashura drove 8,000 miles, of which 2,500 were for self-employed business journeys. It means that the remaining miles were not for business journeys. But this cost has not yet deducted from the loss. So I have to calculate the cost and I have to deduct it myself from the loss. So first I will calculate myself that what was the expense that has incurred for the business journeys, but there was no expense given to me in the question. It means the expense does not needs to be time apportioned. Then which thing needs to be time apportioned? Guys, the capital allowance. The capital allowance that I have time apportioned in the previous question as well. I have made two time apportionments to the capital allowances in the last question. One was the time apportionment of months and one was for the mileage. So I will do the same here. First, what I will do is to calculate capital allowance on car, 25,600 should be multiplied by 9 divided by 12. Whatever the answer is, that again should be multiplied by 2,500 because I only want to calculate the business expense, and 2,500 were self-employed business journeys, the remaining were private, divided by 8,000. So the capital allowance can only be qualified for 2,500 miles. So let's calculate. It's 25,600 times 9 divided by 12. 19,200 is the amount that would have qualified if there were complete business journeys, but there no complete business journeys. So my equation will be 19,200 into 2,500 divided by 8,000. Again, I only want business journeys bit from that. So 19,200 times 2,500 divided by 8,000. 6,000. So 25 600. I'm repeating calculation for you guys. Please look carefully. Multiply by 9 divided it by 12. That's the time apportionment bit. Now the miles bit. Multiply it by 20. But first, remember that this will make calculation complex for you. What you should do is first, when you have the capital allowance, that is, you have 19,200. First, multiply the percentage of the capital allowance. That is 6% in my example. Once you'll have that amount, then we can multiply that by 2,500 times 8,000, because the calculation I was doing before will sometimes becomes complex for the students. They first know that the value of the car that should qualify is 19,200 by 6%, or what you can do is you can take the allowance incomplete, that is 25,600 into 6%, and then multiply that amount into 9 by 12. That is the easiest bit. So let's try using that bit. 25,600 times 6%. That is the allowance that I would have received if there was no time apportionment. There was, sorry, that is 60%, my mistake. 25,600 times 0.06, so 1536. This would have been the capital allowance if there was no time apportionment in terms of miles, in terms of time, but we have both types of apportionments. We therefore have to multiply it by first months, that is 1152, and then miles. So I'll write here that the answer of this was, whatever the answer, times 9 divided by 12 is 1152, and 1152 times 2,500 divided by 8,000 is, multiply by 2,500 divided by 8,000, it's 360. I know it is quite complex calculation, but that's why I have done it three different ways and try to tell you the easiest way. This is this one. First, always take the amount of the car, multiply it by the appropriate type of allowance, then time apportion first, then miles. Again telling you months apportionment first, then miles. So it is 360. Now, if I stop here and if I ask you guys that can you quickly tell me in the question box that will this capital allowance be added back into the loss or will it be deducted from the losses? Will it increase the loss or will it decrease the loss? Guys, capital allowances will increase the loss as it is an expense. If we have the profit, it would have reduced our profits. But now we have the loss, we don't have any profits to deduct it from, we have the losses. So the negative figure with negative figure gets added. Now, Sophia, you have asked the question on strategic mileage before as well. There, I have to disallow the private journeys part because whole of the motor expenses was included in the profit. Here, the expense is not included in the losses. I can easily separate the business journeys part and then deduct it or add it in the profit or loss. So that is the difference between two questions. There, the amount was fully added wrongly. So what I have done is I have added back the wrong part. Here, no amount has been subtracted from 3300 loss. I have calculated the right amount myself and now I will add it back. I hope it clarifies your question. Okay. Now, we have done this bit as well. These are the Ashura's total income for previous tax years. What are they of use? The thing is that you remember that they have asked us in the question about the earlier year loss relief. So these are the incomes of Ashura of previous tax years so that we can offset the income against them. Okay, for the questions that I have not answered, I will answer them after I solve the question. Now, we can start solving the question. We have done the part A. We can calculate the revised losses for Ashura. Let's scroll up. So we can first mention that it is part B and then bold it so that the examiner can clearly know that it is part B. Now, loss as per question was 3300. We have the advertisement expenditure. We'll add the advertisement expenditure. Add advert expenditure. It's 800. Now, Ashura's office cost, you remember guys? So Ashura office cost that we calculated on our scratchpad. So let's visit scratchpad. Office costs were 870. Okay. Now, capital allowances we have. Capital allowances. For that, in the bracket, we can show our working that we have calculated the capital allowances 25,600 times 6% Then we time it apportioned by 9 divided by 12, and then we time portioned multiply by 2500 divided by 8000. So the final answer was 360 that we have written on our scratch pad as well. All of these will increase the loss. If it would have been a profit, they would have increased the profit. Now, I have done with the mileage. The only thing that is left is the computer, because capital allowances were on two things, the computer and the car. So the computer will increase the expense as well. So now I can apply some formula and I can add all of these figures. 7930 is my adjusted loss. Till now, if I confirm, 33 has been incorporated, Ashura's office costs have been incorporated, capital allowances have been incorporated. Now, there is no other information relating to self-employment. Now, the next requirement dealt with that, I have the requirement above. Explain why it would not be beneficial for Ashura to claim loss relief under the provisions giving relief to loss incurred in earlier years of trade. Now, guys, you know that if I want to relieve that loss that Ashura has faced in the first year of her business using the earlier year loss relief, I have to start from the oldest year first. So can you quickly mention me in the question box that from which year the loss will be first set off? Is it the 2016-17 or the 1920? Sixteen, 17. Thank you guys. That is the oldest year. Now, the question will give you hint. If I'm a student, I don't know why it is beneficial, but the question has given me the hint itself that there must be some benefit that I am unaware of. It said that it is not beneficial. I don't know that what is the disadvantage, but the question has given me the hint that there must be some disadvantage. Guys, these are the things or the tricky points that you can only understand by solving the question. If you look at tax year 2016-17, the income of Ashura in that year, the total income was 11,100. That was already covered by personal allowance. So she must not have paid any tax in 2016-17 because her income was so low that it was covered by the personal allowance. Even if I have carried back this loss in 2016-17, will that give me any refund from HMRC? No, because I have not paid any tax in that year. The income in that year has already been utilized or covered by capital allowances, thus giving rise to no tax liability. So do remember that whenever the question says why it is not beneficial, why it is beneficial, it means there is a hint for you. You have to think. But that critical thinking can only developed by solving the question. So now if it asks you in any other question why this thing cannot be done, so you'll always think that, okay, first let me check that is the income so low that it is already covered by the personal allowance? If yes, then this is the answer. So here it is for 2 marks. So what you'll be writing is you'll only writing it is not beneficial for Ashura to claim the loss for the earlier year because in 2016-17 her income was already covered by personal allowance and thus will not result in any tax savings. Okay. Now, assuming that Ashura claims loss relief against her total income for the tax year, calculate her taxable income for the year. So that bit is pretty easy because we have calculated the loss. We can quickly calculate the total income because she only has employment apart from that. Employment, we have calculated most of the part on Scratchpad. So part C, one of the student has asked me, sir, how can I put a pound sign? It is very easy. You can click here. This is a symbol sign, click on it. select pound, then click insert. If it does not allow you, then the second thing what you can do is you can click on this format that tells you the dollar sign. Click on this, select custom, select currency, and from here you can select pound. Click OK, and then whatever figure you'll write here, it will convert it into pounds automatically. 900. Okay, so this is the way to write it. Now, employment income for the total income. So I'll write part C, total income. I will highlight this bit, employment income. For employment income, she had salary. Let's scroll up and write the figures from there. It's 5,600. You can even copy the figures from there as well. It's giving you an option if you scroll down of paste, or you can use the control C and control V functionality as well. So you have the both options. I'll write here myself 56,600. That is the salary. Then less subscription, that is 320. I'll mention that it is the professional. Health subscription is not allowed. So I'll mention that. Then statutory mileage allowance, and I'll show my workings that it is 10p times 3,400 miles. It's 340. And then occupational pension. So the subscription we have to deduct, so it's better to place a minus sign. So when we'll put a sum formula, it's easier for us to calculate. The SMA allowance gets added because it is a benefit, and the pension gets deducted as well. 2,800 is the occupational one, and the other one is personal pension. So the problem is that here we do not have to calculate the tax liability, so we'll only ignore the personal pension contribution because it gets used when we have to calculate the tax liability. Now I will add all of these figures to check that what was his final employment income. It is this 53,280. So these are his income this year. There are no other incomes that are mentioned here, employment and self-employment. There is no other information. It means that his total income for the year is this. Now, the requirement asks me, assuming insurer claims loss against a total income, calculate a taxable income. So I told you in the last question, taxable income means you have to deduct the personal allowance as well, but you do not have to apply the rates. So I'll first less losses from here that I have calculated above. I can press an equals to sign and click here, so he will automatically copy this figure here. Because it is a negative figure, so I'll immediately apply a negative sign. Then net income. Net income equals to this plus this. And taxable income less. PA stands for personal allowance, negative 12,500 Again, this plus this. That is my taxable income. Now, guys, I will answer your question. So all of the question that you have, please put in the question box. I'll try to answer the max I can. Are the solutions for this on the ACCA platform, Asma? Yes, there are. All you have to do is that if you look at my screen, there is a next button, and when I'll move on to the last question, it will ask you to submit your exam. Once you submit your exam, they will, there you have. If you scroll all the screens down, I can show you guys. If it gives you, if it gives you error that you have not viewed the screen, so do remember that you have to scroll down both this one and this one, or you can navigate to the question directly, the last question, that is question 35. It is not allowing me for some reason now. However, I'm telling you that if you move on to the last question, you have to submit your exam. You submit, if you submit your exam, you can again come and retry this exam or reattempt this exam anytime or as much as times you want to. However, when you do that, you'll be able to calculate or see the answers from there. Okay, then I've told you the pound sign thing, but okay, Subhan, we'll see that. Subhan, are you talking about the answer as compared to the Kaplan? If yes, then there is a different question in Kaplan. Okay, then if the loss eats up the current year personal allowance amount as well, then yes. Uh, Sally Pimple, do remember that if the losses eats up all of your income, the current year personal allowance gets wasted. Okay, guys, one more thing that I want to show you, that if you look at this question in the Kaplan exam kit, it is a bit different question. And I want to tell you that the difference is that the Kaplan examiners or the tutors have modified the question to test the structures in business allowance. I have the screenshot of that. I'll share with you. So here you can see, if you look into the Kaplan's question, the second point, the office cost is different there. It says Ashura runs a business from a newly built office and was completed in 2020, shortly before Ashura commenced trading. No deduction has been made for 1110 cost of the office in calculating the loss of 3300. There was no 1110 cost, because there was she was using in that question her house as an office. But here she has running her business from a newly built office, and in that it is building, it is heating system, it is water system and decoration. And you have been asked to see that or to calculate that what needs to be done with every individual item. So guys, I've told you that the structure and buildings allowance SBA applies onto the building value 97,600. It is on straight line basis method. So it applies 97,600 times 3%. 97,600 times 3%. Whatever the answer is, that will be your answer. Heating and water system qualify as a plant and machinery for AIA. So they will qualify for AIA. And the decoration expenses is a revenue expenditure. It is not a capital expenditure. It will be allowed to be deducted from the profits, but it will not be included in the capital allowances. So I told you that at the end of the question, I will tell you about structures and building allowance, SBA. So SBA is applied onto the value of the building. straight away onto their cost as 3%. Whatever your answer comes, just deduct it from your profit, and if you have a loss, it will increase your loss. Apart from that, if you guys have any other questions, you can ask. Okay, sir. Yes, the answers are available there. Guys, for those who said that I haven't answered their question, they have the time now. They can quickly copy their questions. I can answer them. The practice to pass answer, Varisali, I have told that you have to submit the exam. When you'll scroll all the tabs, or when you navigate to the last question, there's a button called End Exam. You press that, and then when you open the same page from where you have accessed the question, it will move into the different tab called Available for Marking. I will in tomorrow's lecture show you that how will you be able to check that. Okay, I'll try to check that. Is there any question that I haven't answered? Guys, we have 2 more minutes. If anybody wants to ask any question, I am available. Uh, Sandra, there is no WhatsApp group currently, but we'll be making one. I'll share the WhatsApp group link in tomorrow's class. No, I'll not be sharing any additional mock, as if there will be any, they will not be updated up to the Finance Act 2020. I want you guys to practice anything that is updated with the Finance Act. Tomorrow I'll be, emphasizing on some other changes on the Finance Act, because in all of my 5-day session, one of the key things that I'll be emphasizing on are the changes in Finance Act. So if any of the change which they will be tested gets tested, you'll be easily able to score the marks from there. Tomorrow I'll be not only focusing on the changes or from capital gains tax of the Finance Act, but I'll be also doing a question, the OTQs with you as well. Yes, the recording will be available after these sessions will end. ACC will share the recordings with all of the students that have registered for the webinar via email. So you'll receive an email. Okay, guys, I have 61 students with me right now. Can you guys raise a hand with who thinks that these sessions were effective and they have helped them? Thank you, guys. I'll hope and I'll expect to see you tomorrow as well. I have the questions that I have given you in the list are more than what we may be able to complete in the class, because sometimes a question takes lesser time as planned, sometimes it takes more. So I have given additional questions to practice. If due to some time constraint I am unable to solve any question in the 3 hours, I will suggest you guys to go on to the practice test, attempt the question yourself, and then you can send your answer in the WhatsApp group and I can quickly check. However, you have the solutions available there. Okay, guys, with that, I'll sign off for today. We'll meet you tomorrow, same time, the 3 hour session, and tomorrow's topic will be capital gains tax. However, we'll be doing a question of income tax as well. Take care. Bye.